Hello everyone. This is the pre-market report video for today, 13th May 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday afternoon, US Treasury Secretary and their trade team gave the press conference about their trade deal with China. Basically, they paused all the Chinese tariff for 90-day period. In this way, US will reduce the tariff from 145% to just 30%. Whereas on the China side, they said they will reduce the tariff from 115% to just 10%, which market across the globe took that as positive since almost all the investors kind of worried about this China-US trade deal standoff. Now it was averted. So last night in the end, Dow Jones increased 2.81%, S&P 500 was up around 3.26%, and Nasdaq rallied 4.35%. In case of VIX, it dropped over 15%. From around 22, it dropped below 19. However, it's not all positive. US President Donald Trump signed an executive order ordering the US pharma companies to reduce the pharma product prices between 30 to 80%, which in turn made the pharma companies across the world to react very negative since it seems Donald Trump is taking away the pricing power from the pharma companies. As we know, one of the India's largest export to US is pharma products, and most of them listed in the Indian stock market. Hence, we can expect all those stocks to be on focus today. Then about oil, because of the trade deal, it further increased mildly compared to yesterday early morning. At the time of this video, WTI crude trading at $62 per barrel, whereas Brent crude trading at $65 per barrel. Regarding Indian ADR, in line with the US market, all of them closed significantly positive. Like both IT stocks ADR closed positive of above 6%, and both banks ADR closed positive of around 3 to 4%, which was massive. But as we know, yesterday in the Indian market, all those respective stocks closed more positive than that of ADRs. Hence, if we calculate the arbitrage difference, all of them indicating significantly negative, like 1 to 3.5%. Here, one important thing to notice, unlike the ADRs, Reliance GDR is okay. In the international market, most of the time it had the negative premium of 0.5 to 1%. Hence, considering that, it's showing positive arbitrage. Then about GIFT Nifty, it's also similar to Indian ADR. Early morning, it dropped some of its yesterday's rally and trading at 24,952. So equating that with the spot market, for now, it's indicating the gap down opening of over 60 points. About institution, in the cash market, FIA after one day of selling now again turned back as net buyers. Yesterday they net bought for 1,250 crore rupees. Similarly, DIA also net buyers. They also net bought for 1,450 crore rupees. Then moving to the derivative market, in the index option, proprietary traders bought significantly more put options over the number they sold. Hence, their net 3.9% open interest on bullish side on last Friday. At the end of yesterday, it dropped to net 3.1% open interest on the bullish side. Proprietary traders still makes more money if market goes up. However, yesterday they reduced their positive stance compared to Friday closing. Similarly, retail traders reduced their bearishness and moved closer to the neutral stance. On Friday closing, retail traders held net 2.4% open interest on the bearish side. That yesterday at the closing, it dropped to net 1.2% open interest on the bearish side. Then regarding FII, their position expecting a breakout, it could be downside or it could be on the upside. Moving to the index future market, FII and retail traders, they reduced their bearishness, whereas on the other hand, proprietary traders increased their negative stance, holding 74% of their open interest on the short position. Please note, as I said multiple times in the past several pre-market videos, this proprietary traders index future market position is an hedge for their index option position. So maybe they may not give serious importance this week like adjusting their short position, but however on the monthly expiry week, most probably they might try to influence the market. So those were the things I like to highlight about the derivative market participant-wise open interest analysis. As a summary, US market closed super positive mainly because of the US-China trade deal progress. However, for those already our Indian market reacted yesterday. Hence, at the present time, GIFT Nifty and Indian ADR all are indicating a gap down opening. In addition, this Trump new threat around the pharma product price cut expects to influence negatively on the profit margin for all the US export dependent pharma companies. Then second, today in the afternoon around 2:30 p.m., Airtel is scheduled to release their earnings, so we can expect Airtel to be on focus today. Moving on, as per stock open interest, Sun Pharma, UPL, IndusInd Bank, HAL, Solar Industries, Divi's Lab, Biocon are the 8 stocks yesterday got an increase in open interest along with the negative close indicates the short build-up. On the other hand, Ramco Cement, Patanjali, Birla Soft, Apollo Tyre, Siemens and Paytm are some of the 15 stocks which got an increase in open interest along with a positive price close indicating the long build-up. About the things to look out, Bharti Airtel, GAIL, Cipla, Siemens and Bharti Hexacom are some of the major Indian companies' earnings results are scheduled released today. Then regarding global macro, before our market opening, 30-year Japan bond auction is due. Then during our market time, first around 11:30 a.m. UK's unemployment rate and then 2:30 p.m. Germany's economic sentiment data is scheduled release. And finally, in the aftermarket hours at 4 p.m., India's consumer inflation for April month is due. Then at night for US, their consumer inflation for April month and some FM's member speech are the important things we need to keep an eye out today. Coming to technical, Nifty opened over 400 points gap up and kept on increasing it to above 900 points and closed above 24,900. Thus, on the daily chart, Nifty formed a long bullish candlestick pattern and broke out of recent consolidation across multiple time frames. In addition, it surpassed its short-term moving averages, 5 and 10-day exponential moving average, along with a medium-term moving average. Furthermore, RSI climbed back above the 60 mark and MACD showed a positive crossover, hence all indicating the further positive trend ahead. So going forward on the higher end, the immediate resistance will be 25,000 mark, which Nifty haven't crossed at all in the 2025 calendar year so far. Breaking that and moving above 25,350 could trigger the next leg of rally, whereas on the downside, the short-term key support is at 24,350. In case of Bank Nifty, similar to Nifty, it also opened more than 1000 points gap up and increased throughout the session to near 1800 points and closed above 55,000 mark. Again, same as Nifty, on the daily chart, Bank Nifty also formed a long bullish candlestick pattern with climbing above all short-term and medium-term moving averages, and also RSI climbed above the 60 mark, all indicating further positive trend to continue for the short term. Hence, the immediate resistance is around 55,700 and a breakout above this level may open the path towards 56,100 in the near term. On the downside, support is at 55,000 level. As per the weekly options data, the maximum call option open interest was at 26,000 strike, followed by 25,500 and 25,000, with maximum new call option rating at 26,000 strike and then 25,500 and 25,700. On the put side, the maximum open interest was at 24,000 strike, followed by 24,500 and 24,600, with maximum new put option rating at 24,500 strike and then 24,600 and 24,700. Thus, from options data, it's indicated that the next resistance levels are 25,000 to 25,500, while support is at around 24,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me with the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.